Go ahead with your thought there, John.
Yeah, so we were just getting into, well, a few different things, but the last one was that, Josh, you were, getting quotes for some work done at your house, and
right, yeah.
You were saying how some of these blue collar guys are, the bills are getting pretty high for when you want to get something done, manual labor, whatever. So I do want to hear about exactly what you were getting a quote for and kind of how high it was and all that stuff, but very relevant. I mean, literally just this morning, I sent out a tweet that was quote tweeting Larry Summers, who's this very mainstream, very establishment economist, worked for the White House in the past. And he sent something a few weeks ago that was like, yeah, well, if you use the old methodology for CPI, it would have been 18% in 2023.
Wow.
And I just looked at that and I'm like, well, I've heard that before. Most Bitcoiners are probably not shocked to hear that. But the voice you typically hear that from is like shadow statistics, the
right,
Chapwood
zero
index.
hedge, like those kinds of the crazy tinfoil hat guys, right?
Exactly. And then there's like a New York Times article that says, no, shadow stats is debunked. And, they're like gaslighting you into believing that it's only conspiracy theorists who would say inflation is higher than CPI. So I see Larry Summers just make this tweet and he's like, yeah, actually it would have peaked at 18% if we use the old methodology. And I just thought, I was like, wow, to see a mainstream guy just definitively say that was kind of made my eyes and ears perk up. And then Lynn Alden also retweeted it. And when that happens, your notifications on Twitter are totally destroyed.
Yep.
So, but anyway, I'm glad that one's getting some traction.
Wait, before I give it back to Josh, because I'm guessing he had a nice intro joke that we need to hit about plumbing. But I was gonna make a comment on inflation. Came up at work a couple duty days ago, and I was saying that I think at this point, with things having leveled off, to be fair, if you are middle class, maybe upper middle class, and you want to stay in that band, I don't think inflation is close to 18%. But if you are middle class and you want to make it middle or middle upper class, and you have dreams, you have aspirations, right, to go to the next level, that is escaping you at a velocity that's probably way beyond 18%, right? 18% is somewhere between the average of the average person's expenditures and the really expensive stuff. And as we've hit on here ad nauseum, the really expensive stuff is going parabolic in a concerning manner. And I think for a lot of people, myself included, I do have aspirations to go up that next notch. Like my wife and I have some dreams and ideas of things we'd like to do in the future. And you start looking at some of those numbers for a summer house, for your kids' education, for whatever. You add in healthcare, all these really, really expensive metrics. Man, are they not slowing down whatsoever. But if you just look at groceries, sure, you can make the case that, oh yeah, we're at 3% or whatever.
Yeah, no, I totally resonate with that. We were just talking before we recorded. I was telling these guys how I was laying pipe all morning. So sorry, I was a few minutes late. But I know I mentioned this on the podcast like a couple months ago. My water heater's dying. I got quotes for a plumber to put in a tankless water heater, and the unit itself is like $1,300, but they quoted like $5,000 to do this, which is absurd. And I'm willing to spend and waste a couple hours of my time, risk blowing up my house and getting a catastrophic water leak just to save $3,000. I'm on board with that. But these quotes for like contractor work have just gotten insanely astronomical. And you can't blame these guys. Like, it's a combination of very few people want to do the shitty hard labor, and prices of everything's gone up, and they're just keeping up with it. And I think they're probably grabbing a little bit higher than they should, but people have to have it done. Most people don't want to risk blowing up their house.
Yeah.
You can't blame a farmer for harvesting crops after a really good season. And so if you're a carpenter, a plumber, an electrician, and your book is completely full and you're squeezing somebody in, why the fuck not charge through the roof? That's supply and demand. And also it's a reflection of a lot of people don't want to do that work. It is really startling how few people want to get their hands dirty in any real capacity. It's jaw dropping. I mean, our
we've
line
all
of
seen
work
what plumbers do, man. I had a guy come here. I have like a giant grinder pump that takes all of the sewage from my house, it squeezes it into a tube that's like 1.5 inches in diameter and sends it out to the sewer. It failed a couple years ago. A guy came out and bare hands stuck his hand in my sewage. Like, that's a man right there.
Yeah, that's
a guy
a
that
man.
Doesn't care about giving his wife a UTI, you know?
Yeah, that's savage, dude. And there's fewer people that want to do that. I mean, our line of work, which we clue people into occasionally, I am in my 8th year on the job, and when I applied, you had to be a paramedic already. So most people had been through, an associate's or a bachelor's. They'd been through they've been through EMT basic and paramedic. So it's not like no education, right? And there were north of 300 people applying for like a couple spots. This is only 8 years ago. When Josh got on, 12 years ago, it would have been even more dramatic than that. More people. Our last test, we had like 30 people show up. It's crazy. It's gone absolutely off of a cliff, the number of people that want to be firefighter paramedics.
It's usually an order of magnitude more than that show up for these tests.
Literally 10 times more. We're 1/10 of what it was when I got on 8 years ago. We digress.
And I look at this as this is just, markets working the way they should, supply and demand, like you guys said. So I don't necessarily think there's like something wrong with these people charging more. Yeah. You should, I don't think we should be shy about the fact that in any financial transaction, the buyer wants to pay the lowest price and the seller of the services wants to charge the highest price. It's always been that way. The fact that everything across the entire economy is going up is not just supply and demand. That's monetary expansion. That's debasement. So that's, the other side of this story. But part of me also just thinks, maybe it's a good thing in the sense that one of the visions I have for Bitcoin and sound money is that industries like finance and law will hopefully shrink. And the blue collar industries, the people who do real work, skilled labor, hopefully will get paid more. And the people in finance and law that have these kind of cushy corporate jobs, and then they just plow their money into at whatever passive investing and private equity and all this stuff, and they earn their 10, 15% per year. That's the game that I want to end as soon as possible. So that's to me, that's like the positive spin on the skilled labor, manual labor jobs charging a little bit more. I think that's kind of like our economy healing to a certain extent.
Yep. I couldn't agree more. Couldn't agree more. John, why don't we pivot here? I was saying to you before we kicked off that you came to mind for us right now. In some ways, maybe inconveniently for you, because I'm sure you're extremely busy, but conveniently for us, because when price does what it's doing right now, you immediately ring bells for us as somebody that's probably very busy, fielding a lot of phone calls and having a lot of interesting, exciting, but also challenging conversations. Clue us into what the last couple of weeks has been like with Bitcoin making the most violent move upward we've ever seen, also remaining volatile. It was at 72,000 when I went to bed, and I woke up and it was 67. It's just strange times to consult high net worth boomers with a lot of FOMO, which I'm guessing you have a lot of exposure to. So fill us in on what things are like in your world at Swan and elsewhere.
Yeah, for sure. Happy to give a glimpse into that. And Dan, I mentioned this to you, but every time I come on now, I'm going to rock the FDNY shirt. So you guys can expect to see that every time.
Love to see it.
So on the Swan side of things, super busy for sure. Something I've always commented on is just this funny thing, but I think it's just human nature. We're never going to get away from it. The best time to be buying Bitcoin in the past couple of years was the middle and second half of 2022. But that was the hardest time to get someone who was relatively new into Bitcoin, especially after the spectacular collapse of FTX and SBF and all that nonsense. Bitcoin's at 16K. Even hardcore Bitcoiners were like, I don't know, man, it's maybe going to 12 or 8K from here. Like even they were kind of skittish, right?
Yep.
So
famously, a lot of people sold. I mean, at least one individual I can think of that a lot of people are kind of beaten on a little bit undeservedly, but go on.
No, totally. Yeah, that came to mind as well. And it's tough. It's human nature. You don't ever know what the next move is going to be in the price of any asset. But it's just funny how, and at the time, Swan always has inbound lead flow coming in from new clients who just hear of Swan, through media, content, etc. Whether they have a friend who's a Bitcoiner and says, "Hey, check out Swan," whether it's me finally orange pilling my cousin, whatever it is, we always have people coming in. But the reality is that it was much slower in 2022 than it is now. And the reality is that as Bitcoin's going from 40, 50, 60, 70, people do say, okay, I feel the FOMO. I've been thinking about this and now I want to get in. So we are seeing that. And it's also people who've been in, they're saying like, hey, I have that IRA that has just kind of been sitting in stocks for a few years and I'll just up whatever the percentage of my net worth is into Bitcoin. So it's kind of all over the map. It's new people. Our clients are also some of the best referrers out there. As any Bitcoiner is, they're always talking to their network, their family about Bitcoin. And we're getting a lot of those emails that it's like, hey, John, this is my good friend so-and-so, please take care of them. So that's happening. And then also we get a lot of questions about like, did I miss the run up? Should I be waiting for a dip and market entry strategy type stuff, which we're always happy to talk through. I remind people I don't have the crystal ball. I'm always looking for it. But people want to ask that question. That's understandable. But yeah, super busy right now. That's just the reality that as you enter into a Bitcoin bull market, you bring in new people who were like thinking about it a little bit. And then that provides the kick in the ass for them to say, all right, I'll finally do something about this.
Yeah, that actually brings something to mind for me. And it's something we harp on a lot on this show, which is don't try to trade this thing. Because if you look at the statistics, there's usually like 10 or 12 days throughout the entire year when massive gains are made in Bitcoin. Like you see those candles that go 5K up or whatever it is. And if you miss those specific days, which are completely unpredictable, you miss the boat. You'll be buying in when it's up and then you'll miss it and it'll go down and you'll sell. It's just buy and hold this thing for whatever period of time, whatever window of time you decide is workable for you, say 5 or 10 years. But if you're trying to play this game of trading, you're going to get burned. That's just the bottom line. And being in this for like 7 years now, there's no way I could confidently say you can trade this, at least from my perspective, without getting your ass completely killed.
Here. And with timing the market, something that's really been dawning on me the last couple weeks. This is cycle 3 for us. And there is some, I'm going to go ahead and use the word grief. There is some mild grief for me about a few select people in my life that I just really wish had trusted me more with taking even just a moderate position and are now all of a sudden reaching out interested, which is so predictable, but also just disappointing if I'm going to be real. And I'm sure there's a lot of Bitcoiners that are listening. And I caution all of us that are feeling that way. Don't let on that that's the case. Just accept them with grace and excitement. Get them to square one. No, I told you so's. You were that person at some point in the past. But to the realization I've made, it's that watching this happen now for a couple cycles, this one, it's really hitting home the hardest. It's me recognizing that people are just not going to buy at the lows. They're not going to buy when they're supposed to. If they're not in and they don't grasp the significance of Bitcoin, they are not going to buy Bitcoin when their assholes puckered, headed straight downward on the roller coaster. It's not going to happen. As much as you wish it would, as much as you can talk about it and share that you think it's a good time, they're not going to. Which then option 2 is I remain extremely bullish on the potential future upside of this asset. I think it's going to head into the 6 figures, and I think it's very likely in my lifetime it's going to have a 7th figure in front of it, which then leads you to believe just get these people a seat. If price is going to be their teacher and this is the opportunity when they're going to take a position, encourage them to do so with one caveat. This is the last thing I'll say is that I've started to say when people are asking for advice these next couple of weeks, a few people come to mind. Yes, I think you should buy Bitcoin. I think you should go in on it. But I want you to visualize a 70% drawdown. Whatever number you're putting in, subtract 70% and realize that you're going to momentarily have to withstand the number looking like that for a period of time. Yeah. If you're ready for that, go ahead and take your seat because this Bronco doesn't stop very often and you might as well just get on the thing and saddle it instead of thinking you're going to when you're in the valley. because you're
Right.
not.
That's back to the psychology John was talking about, though. Most people will say, yeah, I can handle 70% drawdown. That's fine. Like, I can picture that. But when it's actually happening and your ass is on the saddle and you're flying off this horse, like your disposition changes graphically. I've seen it. I've felt it. We all have if you've been in this asset long enough. But it's, I mean, the secret sauce for me is just don't look. Don't add up your balance. Just don't bother. Just entertain yourself with a new hobby or something while this thing does what it does. Because if you pay attention to it and you fixate on it, you're very likely to pull the eject button.
Totally. Yeah. And there's a client of mine who said something similar to what you said, Dan, about, expect a 70% drawdown. The way he talks to friends and connections about Bitcoin is he says, whatever amount you buy to start, or whatever your allocation is that you're comfortable adding, do half to start, and then hope that Bitcoin falls by 50%. Like have a mindset that you're actually hoping it falls so that you can allocate the rest of it at a lower price. And I think that was just kind of training people to say that this asset could fall by 50% at any time. And it doesn't mean you get scared. It just means that, you kept some dry powder on the side for this moment. So I thought that was like an interesting framing.
I love that. That's a great psychological framing to get people in the right mindset for when they likely just purchased. But it also allows them to take a seat in case this thing jettisons upward. Yeah.
Exactly.
Totally.
Exactly. And I like also a relevant to what we're talking about here, the Microsoft analogy, or really could be any of the big tech stocks. This probably applies to Microsoft, Google, Apple, Amazon. If you look at those over the last 20 or 30 years, most time periods, and then you look at the CAGR, the compounded annual growth rate of those stocks, it's like anywhere between 20 to 25% for most of them. So, and if you just look at what $50,000 compounded at 20 to 25% per year over decades, you can, see what that does. It turns into a very big number. And you could show someone the Microsoft stock chart and say, yeah, what would have been the best is if you see this peak here, you sold here, and then see this trough here, you bought here. Actually, you should have bought calls right here. And then, you should have sold it here and bought it here. And then you could play this game and you're like, you have to ask yourself, do you really think you would have done that successfully?
No.
And if the answer is no, then just sit there, hold it, understand what you're holding, right? Like that was the better play, to know that these software companies were going to eat the world, so to speak, and deal with the drawdowns, because these companies have had big drawdowns too.
Yeah.
But over the long term, you get roughly 20% or more. That is a much better strategy, in my opinion, than thinking you were going to figure out when the thing got oversold and get out of it and trade back into it. Plus, that's a full-time job too. So buying and holding is not a full-time job. There's just a long list of reasons to not trade these assets.
Yeah.
Do you ever have phone calls, John, where you have a conversation with someone and 15 minutes into the conversation, you realize two things? First off, this person doesn't know anything about Bitcoin, which is totally fair. We all started there at some point. But secondly, I just don't think they're going to have the ball sack to handle this thing. Like, I'm sure we've all been in conversations where you're like, this is a prime suspect to buy high and sell low right here in front of me, right? How do you handle that conversation with that person? What kind of cautions do you give? What suggestions do you give? How do you suggest they make entry?
Yeah, I would say the good thing is that those types of conversations don't happen often. And I would credit all the people out there, you guys for sure included, that create Bitcoin content, do education on these things, because most of the people coming to us, if they've heard of a company like Swan, they have done at least a little bit of homework and they've consumed some content. And they've probably heard people say these things about how volatile it is and you need to be prepared for all this stuff. So I'm glad to say that it's pretty rare that you see someone, saying that I really think this person is unfortunately going to buy high. And then the selling low, that's, I would say, even more rare, because most people are well educated that this should be at least like a 2 to 3 year time horizon type thing. So they're not surprised to hear me say that. And then I guess one thing I should say is, so I've been at Swan for 2 years now. And this is also just kind of interesting look back at the last 2 years, but I joined in March of 2022. Bitcoin was probably, I don't know, roughly 40K or something, still like, not too far away from the previous high in November 2021. New people are coming in. We didn't have any of the spectacular crypto collapses. So Terra Luna, Celsius, Voyager, BlockFi, Three Arrows, FTX, none of those had happened. And then the first one was Terra Luna, and Bitcoin drops to like, 30 and then 20 really quick. So I guess I'd give you guys that history, one, because I just find it amazing to think how much has happened in the last 2 years.
Yeah.
And then number two, I was not at Swan at the peak of the peak.
Right.
So the FOMO was fading a little bit by the time I got in, and then it was like dealing with all the collapses and the craziness. So part of me is interested. Now we're at all-time highs, obviously. So part of me is interested to see how things develop from here. And so far, the big takeaway has just been like that it's human nature. Inbound inquiries go up along with price. That's just the way it is.
This has been an interesting bull run in the fact that there really hasn't been significant pullbacks. Like 2017 was rife with 30-40% pullbacks here and there, and then it would regain and it would start, reaching all-time highs again. 2021 and 22 were strange because of that kind of double top it did. This one is, what do you credit that to mostly? Just the ETF buying is just sustained and just continues to just pull everything off the market that shows up. Everyone that's willing to sell, it's being bought up and then some. Is there any other mechanic going on here that you think is keeping these pullbacks from happening as normally does? Have you been paying attention the last few years? If so, you know one thing. Not your keys, not your coins. This is a quaint saying, but it's real. If you're not holding your seed keys, you have a Bitcoin IOU, not Bitcoin. CoinKite is the maker of the Cold Card Mark IV. This is the industry standard for holding the keys to your Bitcoin. Holding your keys should not be intimidating, and it isn't. The Mark IV makes this an incredibly simple process. You could be a degenerate firefighter and hold your own keys. That's how simple it is. If you want to create a more complex setup, the Cold Card Mark IV has you covered there as well. You can create a multi-sig using a cold card, a tap signer, and even the upcoming Q1. Speaking of the Q1, if you want to have every bell and whistle and give yourself no boundaries as far as interacting with Bitcoin is concerned, the Q1 is your signing device. CoinKite makes some of the most sought-after gear in Bitcoin. The block clock, seed plates, the open dime, and the Sats card. Everything you need to secure your Bitcoin. Use code BCB for 5% off the Mark IV.
I think the ETF is probably the main culprit there. That's what it feels like to me. I do think it's important to keep in mind that could work the other direction. It's just like this vehicle that people can access with very little friction. And we should probably chat a little bit about, who we think is the buyer of these ETFs. Obviously, it's not one buyer, but categories of people. Right now, it seems to be working in that method of being a price support, but it could be if people start dumping their ETF shares because there's some negative headlines or something, it could work in the other direction too. We just haven't really seen that yet.
Yeah.
And then just a comment on like who is buying the ETF, and this is like anecdotal, but it is what it is. Friends of mine I'm in New York and I used to work in traditional finance. So a bunch of my friends still work in traditional finance. I've been talking to them about Bitcoin since at least 2018. Most of them have not listened to me in any meaningful way. Some of them have told me, I own the ETF now in my brokerage account, in my IRA. So that's like their first exposure to Bitcoin. But it's not just new people. I've even spoken with a few hardcore Bitcoiners where, and we may not like that this is the case, but I think it just is. The friction is so minimal to just click in your brokerage account that I'm adding a little bit to the ETF. I could be talking about someone who 50% of their net worth is in Bitcoin, or maybe even more. And all of it they own in self-custody, cold storage, in a whatever. They're doing it the right way. But even that person may have looked at this bull market forming and they're like, I'm at 50% net worth. why don't I just buy a little bit more of this ETF in my brokerage account and I'll take it up to 60. So I think even hardcore Bitcoiners are playing around with the ETF as well.
Oh, yeah, I think there's no doubt about that. I mean, I want to talk about MicroStrategy in a little bit, but I had, some MicroStrategy, an assortment of mining stocks and some other things, which you pile on additional risk when you own, something that's it's a productive company. There's lots of risk as far as like the people running the company, issues can happen outside of like Bitcoin itself that can deep six any one of these things. It's an additional layer of risk when you do that. The ETF makes exposure to Bitcoin in an IRA or a retirement account just much simpler and more stable, as stable as buying Bitcoin can be. But I think a lot of Bitcoiners are doing that in their IRAs.
Yeah, and some of the hardcore Bitcoiners are going to throw up in their mouth, but we're committed to realism here. I think if there are people for which buying these ETFs makes sense. There are people that wouldn't buy the real thing that will buy this. And if I just think about somebody close to me, it is going to be my recommendation that they buy the ETF in a Roth IRA. You can go and, they should get the real thing in the Roth and self-custody and all that. And I understand that argument. I'm just saying for this person, they're barely at the threshold of deciding to buy Bitcoin. They are not remotely ideologically motivated. They're not, if they make this shit illegal and shut down these ETFs, they're going to be the last person in the world that's going to, disobey US government orders on that. So it's like, and I still want this person to experience some of the upside, right? And flourish financially. So it's like, sure, just go buy FBTC. Like there is a time and place for this. The other comment I was going to throw in, I may have brought this up. We bring this up all the time on the show, but we have these, what we call the 4 eyes of Bitcoin progression. And I thought of your friends who now say, oh yeah, no, I own a little bit in my tax advantaged accounts or my brokerage accounts, as though it's no big deal. And you're sitting there going, wow, that tone has changed dramatically. And the 4 eyes are, at first, it's idiotic. Most of these people for you probably thought you were an idiot, thought Bitcoin was stupid and hollow. Next, it moves to the interesting category, which is where a lot of your friends probably are right now. Yeah, it's interesting. I've taken a small position. The third is it becomes important. People realize it's a stalwart in their portfolio, needs to be there. And then the fourth is that it's imperative. It has to be there. It's the most important asset you own. But you see people slip through this progression and they forget where they once were. Conversations 3 years ago at a bar where they called you a buffoon. Now they act like, of course, yeah, I own a little bit. We'll see what it does. It's very volatile, speculative, but it's like the tone changes so much and nobody recognizes it,
Totally. I love that you guys have the 4 eyes, and I've noticed there's something, not exactly the same thing, but something similar. My former colleagues in traditional finance, this was more of like a 2017 narrative to a 2021 narrative, I'll say. Because Wall Street is also pretty, in theory, you'd think if they're professional investors, they should not be so swayed by hype, but they totally are. So in 2017, we talked about Bitcoin on the floor all the time because it was like the first mainstream bull run. And then as soon as the price crashed, it was like, oh, Bitcoin's dead. We're not talking about that thing anymore. Mm-hmm. 2021 happens, start talking about it again. But the main gripe that they had with Bitcoin in 2017 was, this is a scam. This is a Ponzi scheme. It is going to zero. And then the main issue they had in 2021 was like, well, the government might not allow this to exist because it threatens the US dollar. And, well, look at what QQQ did, tech stocks. And I could just buy QQQ and get the same exposure. And it's like, do you hear yourself? In a 4-year time period, you went from saying it's a tulip bubble and it's a Ponzi scheme to saying it's so important and threatening to the US dollar that the government's going to ban it, and that it actually performs as well as US tech stocks. Do you see the progression you're even going through here? And I think the answer is no, they don't see the progression they're going through. But Dan, you are correct. They're on that trend, and they'll eventually get to the 4th eye, which is what, imperative?
Yep. Yeah.
I think
there's actually a fifth ideological for the psychopaths. Yeah.
It's just human nature, though, to the story that your narrative they have in your own head, as it changes, you kind of rationalize to yourself that it's always been that way, even though it has massively changed over the course of a few years. It's just easy for that internal dialogue to say, no, I've always understood this. This has always made sense to me. It's funny though that you say that the Wall Street guys are as susceptible to the hype as everyone else, because it's a very similar dynamic at the firehouse. Whereas when Bitcoin starts doing these parabolic bull runs, suddenly it's in the consciousness. But the difference is that guys there aren't worried about it being illegal or being a tulip bubble. Where we have to keep them, or we try to keep them on the tracks correctly, is they don't divert into like some shitcoinery, because that's where, I mean, that shit, it hasn't, I don't think it's happened so much during this cycle. But
we've corralled our sheep quite well, Josh. Yeah,
I think so. But it was just complete degenerate gambling. And I mean, we were part of that in 2017.
We went astray. We almost got eaten. We did get eaten by wolves. Yeah.
It was interesting.
People have. Yeah. And that's an interesting little subtopic. One is that I've kind of thought, look, there's going to be a cycle at some point. I previously thought this, that there'd be a cycle where Bitcoin rallies and none of the altcoins like really rally. People realize like this is nonsense. These platforms don't even need a token. They're not solving for any real world thing. They're not decentralized. They're not a monetary asset, et cetera, et cetera. And then I think I had this thought kind of like a few months ago when I was just seeing one of the tokens like go through the roof, and I'm just like, damn, this is happening again. And I talked to one of my colleagues at Swan, and I was just like half venting. I was like, why are these things rallying? Like, what is going on? And he's like, I don't know, when are the big food companies going to stop marketing sugary cereal to children? And I was like, you know what? That might be the proper analogy here, because I think there's two categories of people that get duped by that. Or one's getting duped and the other just says, screw it, I'll do it anyway. What I mean by that is there's a group of people who might be eating Honey Nut Cheerios, and they're like, oh, the commercial told me that it's heart healthy. Like, this isn't bad for me. Like, this is fine. And the crypto equivalent would be the people who believe that the token is, the next Bitcoin, it's decentralized, it's solving some real world use case. They're getting duped. But then there's another category of people that know what it is. They know the cereal is terrible for them. It's terrible for their kids. But they just say, you know what? Screw it. I'm going to do it anyway because it's fun and it tastes good. And that's the equivalent of the crypto people who say, I'm just here to gamble. And look, maybe I'll lose. Maybe I'll triple my money, whatever. So now I'm coming around to the belief that the altcoins might just be here forever. Obviously, that's very frustrating as a Bitcoiner. And one of my colleagues at Swan shared a tweet with me yesterday that he put out like years ago in 2021. And he was giving the analogy that it's just so frustrating that they still get lumped together. It's almost like Bitcoin is clean drinking water for the world. And then like Coke and Pepsi come in and they're like, hey, we're like, you can drink us too.
Right. And then you got your Monster energy drinks, the ones that are just rotting you out from the inside, like Dogecoin.
And then unsuspecting people thinking like, oh, these are all just liquids. Like it's the same thing, right? Like, so anyway, those are some thoughts I had on the whole like Bitcoin crypto thing lately.
Yeah, I think it's a massive amount of people that are gambling. And then there is a small percentage of wolves that are just there to glean off the top. You know, a lot of these personalities, you see the technical traders on YouTube and all the idiots with their mouths agape selling people, this is the next, 10x bagger or whatever, just knowing full well that they're leading people down a path of degeneracy and they're likely going to lose all their money, but they can kind of curtail these small markets and make a ton of money in the meantime so they can afford the cocaine and hookers for the next bear market.
Yep. Yeah. And I also just think it's really dramatic how much a lot of people think they've missed out. We've all felt that way. When you get in, you start thinking about, oh man, so-and-so and so-and-so, they've been around so long. They have so much more Bitcoin than me. Like I'm so late to the party. People are now thinking I can only get, in our say band of income, I can only get hundredths or tenths of a Bitcoin. Like I'll never, and that unit bias and that feeling of missing out, it's a very, very powerful psychological force that I think impacts people tremendously, especially when they're not super educated on what these tokens are. And so I think as time goes on, I do understand the effectiveness of the tripwires of other tokens that basically feed on that insecurity and say,
think about it in
you've
terms
missed
of
out on Bitcoin, but come look at this.
Think about it in terms of Berkshire Hathaway. In the 70s, you could have bought that stock. I honestly have no idea what it was, but I know it was massively less. Let's say it was $5,000 in 1975. And at this point, it's hundreds of thousands of dollars for a single share. And most typical middle-class people are going to look at something like that and go, I can't afford a share of that. There's no point in bothering. And I think that's where Bitcoin is getting. It's on the cusp. It probably is already at that point where people have this unit bias to the degree where they're like, it just isn't affordable. I can't get a meaningful amount of it because spending $10,000 and getting 0.1 Bitcoin when it's 100,000 that's a really tough thing for people to rationalize and stomach. They just feel like they're not getting anything. I remember buying when it was at like $2,500 in 2017, and I bought, I think, a fifth of a coin for $500 or something along those lines. And I thought, 0.2 for $500? Like, what the like this? I remember my brother making fun of me, like, you bought 0.2 and you paid $500. Like, what an idiot! I was like, I don't know, man. I think this is interesting, and I'll play around with it. But that number bias is a big problem, and I think there's been a lot of people talking about moving into sats so people feel like they're getting a more meaningful amount. And I think that would be a good move, honestly.
I do too.
Yeah. And I think that was one of the emails that got unearthed by the Copa Craig Wright case that Satoshi there were a bunch of emails that got unearthed that hadn't been exposed before. And I think one of them was Satoshi saying something like, depending on what Bitcoin's value is relative to other things in the world, dollars, euros, whatever, we could you just move the decimal and say we're going to refer to this amount of Satoshis as one now. It's like unfortunate for people who kind of understand that you're not changing anything. It's like daylight savings time. You don't have more daylight in the day. You're just like moving the human created number. But
and imagine the kind of confusion that could send through the market too, because people are like, well, there's only 21 million and now there's 80 something million. Like, what the fuck? like no, dude, it's the same amount. Dan, there was a guy at the Firehouse the other day talking about how the halving is going to cut the price in half.
Yeah.
And we're like, wait a second. No. You're totally misunderstanding what, like, there's,
he said it with confidence too.
Yeah. There's still a massive amount of misunderstanding out there about how the mechanics of this thing work. Like, the vast majority of people are completely clueless. When they hear the halving, they don't know what the fuck that means.
And people have heard the word Bitcoin enough now that I'm trying to think of another example. I can't think of one. There are phenomena where you've heard it 1,000 times, but you don't actually know what it is, but you've kind of convinced yourself you know what it is. You know what I mean? Maybe an example is like a religion. Like, you've heard Islam, you've heard about Islam your whole life. But if someone's like, tell me about Islam, you're like, wait a second, I have no fucking idea what that even is, right? And so Bitcoin's kind of like that. And so I've seen this happen a couple times recently. This one person I texted,
dude, you're
Josh,
describing politics completely right now.
Yeah,
completely.
Dude, this one guy, and like I'm pumped that this person's interested in Bitcoin, but there's almost like a tone of like they understand what it is. And obviously Josh and I are not walking around the Firehouse telling people we're Bitcoin experts at all. In fact, we try to go the opposite direction. And he's like, so yeah, just pick your brain on like when to enter. He goes, I know the halving's coming up, which means the price will obviously cut in half. So I shouldn't buy right now. And I go, I was like, there's like I'm eating lunch. I kind of want to go take a nap. I'm like, do I engage or not engage? I'm like, I have to. I'm like, come again? What was that? He's like, yeah, it's like with the stocks when they sometimes cut in half. I'm like, you mean like a stock split? He's like, yeah, it's the halving. I'm like, let's talk about what this is. Cause actually mechanically it could potentially do the opposite from supply and demand. But I was like, wow, he feels like he understands what this is. And that clues me into how fragile some of these tops are and will continue to be, because it's people that think they understand what they're getting into and then go for a wild ride, or the people that let go of this. And I think we are a long way away from that stuff. And we're so far from legitimate saturation and understanding
for sure
for the average investor that I just think volatility is going to stay tremendous.
But you know what that signals to me though, is that there is still tremendous opportunity here. When the average person's understanding of this is so vapid, when you actually do understand what's going on, and like you said, John, the education is vital. So when you see the FTX explosion and you understand fundamentally Bitcoin's not really affected, it's just a bunch of people panicking, that's when you can move in with some confidence and buy at the time you should be buying. It's the people with this vapid understanding that panic sell and ended up getting, fucked on both ends of this thing.
Get spit roasted. Yeah.
Yep.
Yeah. Totally.
What is up, folks? It's Dan here, and I'm going to take just a quick moment to talk to you about where Josh and I buy our Bitcoin, and that is at Swan Bitcoin. The two of us have now been dollar cost averaging on Swan for years, and here's why. It's user-friendly. The fees are low and transparent. Withdrawals are absolutely free. They offer attentive expert service, and Swan has a full suite of financial services, including an IRA product where you can roll a traditional or a Roth IRA into Bitcoin, Swan Private for high net worth individuals, and coming soon, Swan Vault for collaborative custody. In our view, Swan just gets it. They're focused on Bitcoin only. They provide really solid and ongoing education, and they strongly encourage self-custody. Maybe most importantly, it's low friction. Setting up and accessing a Swan account is so easy that it's boomer and firefighter proof. Keep that stack thick. That's THIC, no K at the end, at swan.com.
Bitcoin 2024 is moving to the heart of Bitcoin country, Nashville. Nashville just feels like the proper place for a Bitcoin conference. I can't guarantee we will be on main stage, or side stage, or even performing a puppet show. I can, however, say that we will be hanging out with the plebes, and if we have no obligations, we will very likely be getting drunk. Bitcoin Magazine is introducing a new event this spring, Bitcoin Asia. It's shaping up to be an unmissable experience. Stay tuned for more info. Whether you want to visit Bitcoin Asia or Bitcoin 2024 in Nashville, we have a coupon code for you. Use coupon code BCB for 10% off any ticket to either event. That's code BCB.
There's a bunch of things to get into there. The halving is a funny one. I have two anecdotes I think I want to share. One is that I had a buddy who, this is what I want to say. So you guys reminded me of the quote that is, it's something like, if you admit you don't know something, you look like an idiot for a minute. But if you pretend that you know it when you really don't, you're an idiot for your lifetime, something like that.
That's wise.
We're probably hitting on like you said, Josh, like these are problems in politics. Like we're hitting on like a broader societal issue here that people, for whatever reasons, and maybe it is just human nature, they're more inclined to pretend they know something, even though they've done 30 seconds of research on it, rather than just say, hey, what is that thing? I don't know about it.
Yep.
And I have a buddy who works in traditional finance, works for one of the big banks. He's definitely a smart guy. He follows markets because he's in a markets facing macro type role. He wouldn't say he's an expert on Bitcoin at all, but he and I text and talk about it. A few weeks ago, he's one of these guys, another example of someone who bought the ETF. So he's like texting with me about it because he knows I'm deeply into the space. And he sent a bunch of thoughts on like how Bitcoin fits into the macro and like why now is a good time to buy and blah, blah, blah. And he said something like, oh, and we're coming into the halving. But then his last text to me was, and by the way, WTF is the halving anyway.
Available supply just cuts in half every 10 minutes. It's no big deal,
Yeah,
but
he felt totally comfortable listing all these things in his like macro view of Bitcoin, including listing the halving. And then literally his next text to me is like, hey man, what the fuck is the halving?
Yeah, I really do wonder, like, if you canvass the average person, what percentage of people would have any clue what that is? I'll bet you it's a vanishingly small amount, like 0.1% of the population actually knows what that means.
Yeah. And the crazy thing is like, it's not that complicated of a concept, right? Like you don't have to be a professional investor or a rocket scientist to understand Bitcoin's on a supply issuance schedule over X amount of time. And roughly every 4 years, the amount of new Bitcoin that comes out in a block, which is roughly every 10 minutes, gets cut in half.
I do remember
probably be hard for people to comprehend like how it fits into Bitcoin, but the concept itself is not very complicated.
Yeah. When I was learning the vast majority of how the mechanics of Bitcoin in 2017, I do remember a couple of times just being like, wait a second, like trying to understand and grok how mining works and what it's actually doing.
Yeah.
Because initially you're like, wait a second, computers are just running and throwing numbers at the wall and what appears to be wasting tons of energy, right? You're like, I'm just completely lost here. So I do have some empathy for people that get into this space and they're like, wait a second, you got to learn about this thing called mining. You got to learn about the mechanics of the halving. You have to learn how, there's just, like you said, it's just better to buy the ETF for a lot of people and just worry about the final number in the end, because most people aren't going to spend the time and expend the effort to spend the 100 or 1,000 hours it takes to really truly have even a meaningful understanding of this, because it's a never ending journey. Like, there's still tons of things about how Bitcoin works that I am far from actually understanding, because I'm not, in there programming anything, and all of that stuff is a black box to me. But I want to pivot this thing to talk a little bit about the mechanics of how the ETF actually works, because I know that's something you're pretty familiar with. Just some simple things like, they probably do it a little differently with each one, but do they just lump buy once a day? Do they buy throughout the day? How does an OTC desk work? Give us a little bit of background about how these things actually mechanically work.
Yeah, so the one that I feel like I can speak to very well, because this was my world in traditional finance, is the concept of OTC desks, which, for anyone who's unfamiliar, is over the counter. So this is like the opposite of a centralized exchange where everyone who trades on the exchange has an account at the exchange. There's an order book where you can, the exchange is matching up buyers and sellers. OTC, over the counter, is this more fragmented market. There are these players who exist to say, we're just going to be a market maker in the general sense of the word. We're going to connect buyers and sellers, a broker, if you will. So I'll talk mostly about the OTC desk side of things, and I'll just make as a general comment. I would say this is one of those things where it's important to keep in mind that just because someone worked in traditional finance definitely does not mean that they understand all aspects of finance. The analogy I love to give is that someone who works in medicine, let's say they are an oral surgeon, they may know everything about oral surgery. It doesn't mean that if you ask them about something else medical or health related, that they're going to have a good answer for you. So, keep that in mind. But I can talk a lot about OTC desks. About the mechanics of the ETF, I have a little bit of an understanding and how it fits into OTC desks, but I just want to underscore that my forte will be OTC desks.
Okay.
Because I worked in a fixed income portfolio management investment team, and fixed income just means bonds. So corporate bonds, treasuries, mortgage-backed, municipals, emerging market debt, etc. Those all trade on an OTC basis. You're not trading those on an exchange. So if we wanted to go buy a bunch of some corporate bond, we go to we would call it the sell side, so the other part of Wall Street. You go to the broker dealers and say, hey, I want to buy 10 million worth of this company's corporate bonds. And this is where it gets interesting, because I called an OTC desk a broker, but there are lots of different types of brokers out there. A pure broker would be like a real estate broker. And pure broker is just kind of something I made up. I think that's a good way to describe them. But why I call them a pure broker is that they're not buying your house from you, taking it into their name and saying, let me go find a seller for this house and I'll eat all the market and price risk. They are truly matching a buyer and a seller. They earn a fee. That's
so it's almost like you could describe it as consignment.
Yeah. They're just matching up buyers and sellers. But it's confusing because we would call that person a broker, but we would also call a broker on Wall Street. We call them a broker as well. But in financial markets, these people are not matching up a buyer with a seller for every single trade. They are taking some market risk, some price risk. They're holding some inventory. They don't want to take massive bets on those things, because if they are, then you're venturing away from being a broker. And now you're more like a hedge fund, right? Like you don't want to buy a bunch of Bitcoin from this guy over here, hold it on your books, making a bet that the price is going to go up in the next, few hours or days or whatever. Because if you're wrong, then like you're just losing a ton of money. Now you're like this quasi hedge fund, quasi broker. So you don't want to take too big of bets, but the reality is that markets would be very slow. They would grind to a halt if every time someone came to you with an order to buy, that you had to go find a seller for that exact amount and get them to agree on price.
And
so the reality is
just a quick question.
Yeah,
I don't want to divert us too much into the weeds here, but that's also where options markets come in, right? So let's say you're holding 10,000 Bitcoin and you can't really take the price risk. You could take the other side in the options market with it's basically an insurance policy to protect your ass in case it goes down 30% overnight or something.
Yep. And that's why this is a full-time job. Like being an OTC desk is managing your exposure, whether it's, you're getting close to matching up buyers and sellers and you're high degree of confidence that this guy on the top of my list is going to want to buy this Bitcoin I just bought from this other person at approximately this price because he gave me indicative orders of where he's looking to trade. That's one way you would manage your exposure. Or maybe you just, using options and derivatives, you say, okay, now I'm hedged and I don't really care who the next buyer is because I've hedged my exposure. So it's a very complicated thing, but that's what brokers and OTC desks are doing. And then just one comment I would make about the fact that there was this narrative kind of going around OTC desks are running out of Bitcoin. The TLDR view that I have there is that I don't think there's a ton of signal in that type of a statement, even if it's true. And for a few reasons. One, I would say is that as far as I know, Bitcoin OTC desks, they're not heavily regulated. So the data on that, I think, should be a little suspect. It's how exactly did you calculate this real-time data on every Bitcoin OTC desk in the world? You just compare that to the world I used to live in. These are US-based financial institutions that heavily regulated, and they have to report their inventories. So we could get a report on, we call it dealer inventories. And it'd be this is, what they have in bonds. You could trust that data, but that was from a heavily regulated industry. And even then, it wasn't you could just look at the inventories and be oh, dealer inventories are building up. That means the prices of bonds are going to go down. Or dealer inventories are shrinking. That means the price of bonds is going to go up. It's just not that causal. So the takeaway from me would be, unless someone has a really compelling case of what's going on at OTC desks, if you're a Bitcoiner out there, I would not think you can take away some big signal if you see a tweet that says the Bitcoin's going down on OTC desks.
That's helpful. That's a helpful anecdote for sure. Cause I think that narrative, people love to sling that. It's come out at numerous junctures and I've certainly heard it a lot recently.
Oh, one question before we move on from these OTC desks. So this is something I think I know, but I don't 100% know if this is true. The reason they exist is generally because a large buyer, like say an ETF, wants to come into the market and they want to procure 5,000 Bitcoin or something. But if they do that in say Coinbase, there's going to be massive slippage. They're going to create, this price movement that's going to keep them from buying at the price they wanted. Is the primary reason for these things to exist to kind of protect people from price slippage when they're buying a massive amount?
I think that's part of it. Yeah, it's a little bit more if you put an order for a massive amount on an exchange and then that's just in the order book.
Yeah.
That you don't really want that as a market participant. So I think that's part of it. And then I think part of it is just how markets kind of came to be, whatever the market is. So, and it's the fact that it's this globally distributed, fragmented market. You could have an OTC desk that is based somewhere else in the world. Everybody can communicate fairly easily now. I think that's just a more natural way for a market to develop around Bitcoin rather than having the New York Stock Exchange and you convince everyone hey, if you want to trade your Bitcoin, you got to do it via the New York Stock Exchange. Just given Bitcoin is this globally used fungible asset, an OTC desk kind of makes more sense that it would develop that way.
Let's pry your brain a little bit on, let's start with MSTR. I don't know if you have any thoughts.
That's where I was.
Feel free to go as deep or shallow as you want. And then I also want to hear your take on mining stocks. This obviously isn't for Josh and I at all. It's
no,
for
not
a
at
good
all.
friend of ours.
We got to be careful with this topic, dude. MSTR is a very polarizing topic.
Yes,
right now,
it is.
There is some real fucking back and forth on Bitcoin Twitter about this. I own a decent chunk of it. It's gone up parabolically. So I was doing some math, and I know a lot of people have been doing this on Twitter as well. But the math I came up with is that they have roughly a $28 billion market cap, right? They own about $14 billion of the Bitcoin. They're carrying $2.5 billion in debt. So that premium is pretty massive if you're just considering the Bitcoin. Obviously, they have a business running, which is spitting off, I think it was something like $400 million in profit a year. I guess, I don't know how much you've dug into this, but based on those numbers, how can that be a justified valuation at this time?
Yeah. So I haven't dug into like whether 28, 29 billion market cap is like the justified valuation, but I could definitely share some thoughts on MicroStrategy risk profile versus like Bitcoin and performance and beta and all these things. So my view is basically that, and I don't think this is going to be that earth shattering. And it is funny how it's become this like polarizing topic on Bitcoin Twitter. But my view is that it should basically just be the value of the Bitcoin that they hold, and then like make an adjustment for the fact that they are acquiring it using cheap cost of funding, but it is debt that they have to pay back. And I'll come back to that, why that's important at different points in the cycle. And then they have this, it's funny, I've called it the core business in the past, but now I feel like it should be called the legacy business.
Yeah, seriously.
Their core business is acquiring Bitcoin now. So they have this legacy business that has clients, it has revenue, it has cash flow. So you have to account for the value of that as well. But at any given time in the cycle, I think MicroStrategy could be more attractive than Bitcoin, or it could be less attractive than Bitcoin. And you have to be willing to do the analysis, that valuation analysis. And you also have to be willing to take on different risks than just holding Bitcoin yourself. And I think 2022 is case in point, because as I look at my just like market stuff here, 2022 total return for MicroStrategy was down 74%. For Bitcoin, I don't have the exact number, but Bitcoin on the calendar year 2022, I don't think was down exactly as much. So MicroStrategy was down more. And if you guys remember the narratives that were going on in 2022 with MicroStrategy, people were like, hey guys, they have debt. Like you have to pay this back eventually, even if it's like cheap cost of funding and whatever. And then people were speculating about where their liquidation level was.
Yes.
And some people were saying it's here. And then people are like, no, it's here. It's here. Oh, it's actually higher. And
I don't know if this number, for some reason, this number comes to mind. I think Saylor made a comment that it was between like $4,000 and $5,000. I don't know. Don't stick that to the wall, but that's the number that I heard. And obviously we didn't get anywhere near that, but
agreed.
Yeah,
that's the
that
number
would be a
I
real
heard
fucking.
as well.
Okay.
Yeah, that's the number I heard as well. But
the shit show that would play out, though. No, sorry. I'm just imagine the shit show that would ensue if they got stopped out, and it was just it would be one hell of a correction.
Yeah, exactly. And that is what had to be going through your mind. If you're a big holder of MicroStrategy in 2022, like now we look in hindsight and we're like, okay, Bitcoin basically dipped to 16K, a little below 16K for a hot second. And let's assume their liquidation point was like 3,000 or 4,000. You look back in hindsight and you're like, oh, it wasn't really that close, right? That's easy to say now.
It can wick quickly.
It can wick quickly. And also, like Saylor sent out a tweet. I don't think he would ever lie about this, but like, maybe they had multiple liquidation points and maybe they would have been like partially liquidated at a higher number or something. Like if you're going to really put your wealth in MicroStrategy, you want to understand exactly how their liquidations work, not just go based on one tweet that they sent out. And then just think back to after FTX collapsed, like we were saying earlier in the show, there were a lot of people that thought the next move for Bitcoin was like 12K, then 8K, then who knows where. So back then, like 4K Bitcoin was actually not that.
No, it was in play. It was 100% in play.
Yep.
And this is I was just to like wrap that up. Basically, that's the huge difference between MicroStrategy and just holding Bitcoin, in my opinion, is that you get into these stress times, and 4K Bitcoin probably wouldn't have bothered a hardcore Bitcoiner who was like, yeah, if we go to 4K because FTX collapsed and people are confused and scared, like whatever, I'll hold through it. But if you're a MicroStrategy holder and you're like, wait a minute, they're going to get liquidated and fire sale, and I might lose all of my investment. That's a different risk profile.
Right.
So that I think different risk profile, and then whether or not you outperform holding MicroStrategy compared to Bitcoin is entirely dependent on what part of the cycle you get in. So if you were willing to step in November of 2022, MicroStrategy is going to outperform Bitcoin, but you had to be willing to take on all those extra risks.
Yep. Yeah, I owned a little bit in the last bull market. When he started entering the market in 2020, I was like, oh, this is interesting. I'll buy a little bit of this. Watched it go from like, I don't know what it was initially, like 80 or $100 to like 1,200, and then catastrophically shit the bed over the next year and a half or so. But if you watch its movement along the price of Bitcoin, it outperformed Bitcoin until that first peak, and then it trailed off and underperformed Bitcoin for quite a long time. So, and with the premium we're seeing right now, I would be very cautious. That's just my 2 cents.
Yeah.
Agreed. Yeah, it's all going to be dependent on when you get in. And that might be part of why some people is so polarizing, because there's like one guy arguing who got in an attractive time and like was like, yeah, this is a great investment. And then other people are looking at it today and they're like, man, this has run up so much. Like, why would you own this versus owning real Bitcoin? They're just like having different conversations.
Yeah, they're kind of two ships passing in the night for sure.
Yeah. What do you think about mining stocks? Do you have any thoughts on any of that?
Yeah, they've been fascinating. Again, I'm just looking at like when I look at market data, I have one for basically all the Bitcoin proxies and mining stocks. If you look at 1 month returns and 3 month returns, the miners have been a huge laggard. Bitcoin's probably up 30% in the last month. And then I'm looking at all publicly traded miners, obviously. The publicly traded miners, it's a range, but they're down a bunch of them from like 25 to 50% in the last month.
But I wonder how much the halving is factoring into that, are people going, well, these guys are going to be half as profitable in a month or, 3 months from now. I don't know. I wonder how much of that is factoring in.
Yes. And that's one thing I wanted to hit on, which was, and this is anecdotal, but I thought it was interesting. Last year, in like late summer of last year, had the opportunity to meet with the CEO of one of these publicly traded mining companies. It's just a casual meeting because one of our guys at Swan happens to be former coworkers with him. So we just met and kind of chatted, talked about the industry. And he made the comment that they're now publicly traded. So keep in mind, that means there will be Wall Street coverage of these companies. But Wall Street is so early in its understanding of Bitcoin, and Bitcoin mining is like a rabbit hole of its own.
Yeah.
So these companies who are like covering them and supposed to understand it, the CEO made the comment that he's like, look, Wall Street coverage does not understand, or they're having a hard time understanding the halving and difficulty adjustments. So again, this is anecdotal, but what I'm wondering is if the halving is just kind of throwing these people for a loop and they like don't really know how to treat it. And they're just looking at it like, oh, the mining reward is going to get cut in half. Like maybe this is bad for miners, and there's some confusion there. But the other even bigger point, I think, to talk about mining underperformance is that you have to remember what these stocks did in 2023, the calendar year. And they were rocket ships. So Bitcoin being up 150%, spot Bitcoin. Some of these publicly traded miners were up like between 300 and 600%.
Yeah.
So the more simple explanation might just be like, hey, these stocks performed insanely well in 2023, and maybe some people are taking profits.
Yeah. I think what people are like, well, they're not back to where they were kind of thought. And I think it's very multivariate as to why that was. I'm talking from previous all-time highs. And a lot of that is there's just so many more options right now, and they were serving as proxies. I mean, there were not many options.
Also,
just look at your own behavior. That's why I owned them. Like I would never have bought this stuff if there was an ETF. So they probably were overly juiced last cycle in a sense, and we're kind of having to grapple with that. As I say that and sell these into FBTC, they're now going to jettison.
They're going to fucking rocket ship off. No, I've got a small holding of mining stocks that have not performed very well, and I've just decided I'm going to sit on it because as soon as I sell them, that's when they will rocket off.
Yeah, that's what I've been up to. It's a small position, but I swear to goodness, man, the moment I move those over,
Dan, you should sell yours. I'll keep mine.
All right, sounds good. Yeah, the guinea pig.
Yeah. The other factor too, and this is something we're all aware of, but I think Wall Street maybe doesn't understand, or maybe they do understand, and that's why they're underperforming, is a couple of years ago or 3 years ago, it was 200 exahash. We're well over, what is it, 600 exahash at this point?
Yep.
So they are producing 1/3, and it's about to get cut in half. I mean, obviously they could have deployed a lot more miners that could have been compensated for, but there are so many mechanics that go into trying to value these things, and whether or not they're holding Bitcoin in their balance sheet, whether they're not, whether they're selling it all. It's just there's a ton to parse through, and it's gambling unless you really know what you're doing, to be totally honest.
Yeah. And I think one anecdote, just kind of a word of warning for people who are thinking of getting involved with the miners, is think what happened last cycle. I think it's fair to say that probably the 3 most popular miners, the ones that I just heard of the most, were Marathon, Riot, and Core Scientific. Maybe I have a skewed view because I just heard those company names for some reason. They had like some public content, like interviews of CEOs, etc. But those, if you would have said, name the 3 biggest miners last cycle, those are the 3 names I would have given. One of them went bankrupt. So it's not as simple as just being like, oh, let me just like dabble here and, I'll just blindly buy these 3 miners. Because one of them, you literally would have lost your whole investment. So I think it just highlights the fact that mining is this insanely competitive industry.
Yeah.
And I don't think that goes away. Like that's just a function of how Bitcoin is designed. It's like this perpetual quest for the cheapest electricity and the miners who took on the least amount of debt and bought their equipment at the cheapest prices. So again, don't just like blindly say, I'm going to buy 5 Bitcoin mining stocks. Like you actually have to have some view on why these companies are going to do well, especially through the halving.
Is there a Bitcoin mining ETF? That would be nice. I would just buy the ETF and say, fuck it. I don't want to try picking individuals.
Yeah, that would be interesting, but I'd be curious to see like, how is the Bitcoin ETF coming up with the universe? Like, how are they deciding what's in it and what's not? That would be, I would want to know, like, is this actually a good way to play the whole industry, or do you end up with a couple companies in there that go bankrupt and drag down your performance?
For sure. You talking about a mining ETF is kind of on the line of what I was going to say, which is that another theme about Bitcoin for a lot of new entrants is that they're new to investing. Like this is where our world might be the exact opposite of yours. Like there are people that get interested in Bitcoin, and it's really the first time that they are into spending, care about their cash flow, start really paying attention to their portfolios. And there is a high level of naivety. I mean, some of the stuff I've encountered from people trading this around and then having no clue what capital gains tax even is. They don't know what that term, like that level of misunderstanding. And so there are people that, like, before Bitcoin, I would never advise people in retirement accounts to buy individual stocks personally. It was always, low cost index funds, whatever it is, right? And so I think some of these same principles that I was harping on pre-Bitcoin, I still continue to harp on, of like, when you go decide to buy individual stocks in a Roth IRA, they can go to zero. Like they can go to fucking zero. And I think a lot of people aren't aware of that. They just think, oh, this is this Roth IRA thing that I put money in and I just select the funds and it goes up over time. It's like, careful not to touch yourself too much. Generally speaking, for the average listener, unless you're wanting to take on a lot of risk, your Bitcoin exposure should be real Bitcoin, or it should be a Bitcoin ETF. There's no reason to really play around with this other stuff. And there are many times where Josh and I look at each other and go, yeah, we're probably getting a little bit too cute. Like we're probably not taking our own advice here. And but yeah, that's just a warning to people that, back to these miners, and you talk about them going bankrupt. Like you can take positions in these unproven companies in a tax advantage retirement account, and they can go to zero. And just there's no reason to. Bitcoin's volatile enough. I think that, not that this is hardcore investing advice, but I think for most people, and I would point this back at me, keeping it simple is the way to go. Yeah, and I just grow in that conviction more and more over time.
Yeah, and the banks might get a government bailout. If you invest in a bank, you might get that backstop. The government is not going to be bailing out Bitcoin mining stocks anytime
No, they are
soon.
not. They're going to be cheering for their demise.
Yeah, and it's a ruthless industry. I mean, when we've had Harry Sudak on here, we've talked about just how absolutely cutthroat and ruthless and how challenging the margins are and how, quick you need to be on your feet to survive. And so the propensity in an industry that's that novel and that's churning over that quickly and has this many outside variables that are very dramatic, like the halving, who knows who's going to survive in the jungle, dude? It's fucking anacondas and alligators and fucking anteaters just trying to survive. And who knows who's going to be here next year,
I'm not betting on the anteater in that situation.
Core Scientific was the anteater, dude. They got fucking swallowed whole.
I just got completely blind luck that I never bought Core Scientific. I have both the other ones, and I think I had HUT 8. I still own some of that.
Yeah,
too. John, thanks. Is there anything else that you want to talk about on the ETFs or the mining stocks at all?
No, nothing on those topics. Maybe I could say one thing about something I will be following. And this is, lighthearted poking fun at my former employer. But they made a call in December 2023 that 2024 would be the year of bonds. And, we're not even 3 full months into 2024. But that's one that I will be watching because I do not agree with that call. I think even if bonds perform well in 2024, I think most scenarios that means other things are going to perform even better. So you wouldn't be happy owning bonds in the first place. But yeah, if you follow me on Twitter, I will be keeping tabs on that. I probably won't post that to LinkedIn because that's where all my former colleagues follow me. LinkedIn isn't really that contentious. I don't know, but maybe I could be convinced otherwise to throw some shade at my former employee for that call.
That is
interesting to watch.
I mean, I shy away from ever giving people financial advice for their retirement accounts and stuff because I don't want to be the one to blame when shit hits the fan and they didn't go well for them. But one of the things that bothers me the most is that all of these 401k plans, how you can basically choose your amount of risk. You want to be aggressive. They put you in stocks more. If you want to be conservative, quote unquote, you get a bond portfolio. I've told multiple people that we work with that are getting to be, closer to retirement age. Like, I wouldn't necessarily just assume that you put it in the conservative, quote unquote, scenario and you're going to be okay. Like, those things are much, much riskier. Those fixed income portfolios can be extremely risky. And I don't think people, and I know that the vast majority of people don't understand that at all. They're just assuming that because this entity says this is very conservative, this money will be there for me. I think that is a travesty that they are putting it through that lens to a lot of people.
Yeah, and ignoring the slow but very real and insidious risks of cost of living. And it's a bigger deal in our line of work because people are letting loose at 50 or 55. You know what I mean? And they have a lot of life to live. And there's a lot that could change in terms of how expensive things are to sustain themselves. And that is a huge risk that, I mean, we harp on this all the time, and that's this space, but an absolutely glaring risk that many don't even have on their radar.
Yeah. Yep. And I think there might be some people where bonds make sense. I think some of this is like a financial planning question. Like, what is your time horizon? Have you already grown your nest egg to a point where you're not really going for capital appreciation? You're more so going for capital preservation. And then even like a mindset, you need to know where they're coming from. Like what will make them not able to sleep at night? Is it the fact that they, owned bonds, but their portfolio kind of melted like an ice cube a little bit due to cost of living? Like, are they better? There's different people are going to handle that situation versus like, okay, I went with a slightly riskier investment and it went up and down over time. But like when I look back 10 years from now, it was better. So some of these you just need to like gauge the person and what their mindset is. So, I'm definitely not saying that like no one should invest in bonds, but I couldn't help but notice that my former employer was making this call about 2024 being the year of bonds. So I will be watching and commenting on that one for the next 9 months.
It'll be fun to track.
Yeah.
A lot of wisdom from you today, John. We appreciate you. Give our audience another handoff to you where they can find you and any parting comments.
Yeah, for sure. So on Twitter, John_@_Swan, John at Swan. I might even get a blue check soon. I feel like I have to just get a blue check for the bull market.
Game.
Yeah.
Yep.
There, and then LinkedIn, I'm trying to be more active just because I think most of the people who follow me on Twitter, they're already pretty hardcore Bitcoiners. So I'm trying to branch out on LinkedIn. I think now is the time to do that. If I was like heavily posting about Bitcoin on LinkedIn in November 2022, people would have just like tuned it out completely. I think where we're at in the cycle, people are more willing to hear that. So those are probably the two platforms where I will be most active. And then just real quick shout out for Swan, obviously Bitcoin financial services company. We're kind of here as a resource for anyone who's looking to learn about Bitcoin, learn about our platform, understand the best ways, best practices for purchasing Bitcoin, custodying Bitcoin, and everything else that comes with it. So that's what I would leave people with.
Appreciate you.
Well, boys, I'm gonna go disassemble 10 feet of gas line if I die in a horrible explosion. Just know I died laying pipe. What I love.
Yep.
That'll go on your
what you
tombstone.
love.
Yeah.
Laying pipe. Figuratively first and then literally second. Those priorities, right? Take care, gentlemen.
See you guys.
That was a blast, guys. See ya.